All right, welcome everyone back to the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
Not much, man. How you doing?
I'm doing good, bro. I woke up with the Oracle running like crazy. I was like, God dang, I missed this thing, man. I was looking at it yesterday before the report, and I was like, should I swing? Should I not? I just swung Lululemon. The IV crushed my ass, so I didn't make any money out of it. So I was like, you know what? I don't know. I might this one out. And boy, was that a mistake. Damn,
And
man.
the crazy thing is, I don't think anybody expected
Damn.
what happened with Oracle. I was looking at the 320 weeklies. So
Mm-hmm.
let me put this into context. If you bought the 320 strike price that expired this Friday, you would have turned $500 into 1.2 million because
Yeah.
those contracts were $1 each. So if you put in $500, you can get 500 contracts.
Yep.
They were trading at 2,500 per contract at one
Hey,
point today. I think the high was like 2,700 a contract.
bro, you would have woke up a very happy man or woman, like
So,
and
and so would the IRS.
but 60% of that is 60 or 40% is like
40% of
gone.
that is pretty much gone.
Yep. God dang. All right, man. That's why I always say, man, the stock market, man, you are one trade away. You are literally one trade away from like changing your whole portfolio, you know, and those trades is the one you take the risk on. So, I mean, it's one of those risks where you got to take like, if I lose that money, I'm good. You know what I mean?
Yeah. See,
So,
if you okay losing $500, like that. But to
yeah.
me, based on where it was trading, it's one of those things where it's kind of like, who would think to go that far out the money?
Yep.
Like that's
Yep.
a little because the percentage on that is over 2,500%.
Yep.
So you would need to really know that a big, big, big,
Big
big
move is
move is
coming.
coming.
Yep.
And when I looked at the contracts that were traded yesterday, there wasn't really any speculation or speculative trades yesterday.
Nothing crazy. Yeah.
No, nothing crazy. So when I looked at it, I was just like, I know some people make some real
Mhm.
money because the open interest on some of those options were, they had some open interest at the far, 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 far strikes.
Yep.
But man, that's crazy. 500 to 1.2 million.
That's money, man.
That's crazy. That is
But
crazy.
yeah, man, like I was kind of shocked. I woke up and I was like, oh my God. Oh my God. Like today somebody woke up happy, and a bunch of people that I saw posting and stuff, they woke up happy. But overall, man, the S&P closed about 0.3% up today. The Nasdaq was up 0.1%. The Dow Jones, surprisingly, is still down 0.5%. I would think with all this talk about, interest rate and all that stuff, it, you know, it might kind of go up a little bit, but no, it didn't really happen.
Nah.
The other thing that happened today that we can talk about a little bit is PPI, Producer Price Index. It actually came down a little soft. So a lot of people saying it's easing some inflation concerns, and maybe optimism around like Federal Reserve about to cut some rates and all that stuff. But we'll see, man. Tomorrow we have CPI, so we'll see how CPI looks in the morning. I think people are predicting about 0.3% increase or something like that. It's like it's not too much, but yeah, we shall see, man, how it looks tomorrow. But the other thing that also we talk a little bit about is Apple. Bro, I was disappointed. I
You
was
you you and everybody else.
I was disappointed. I was like, what are y'all doing? What exactly are you guys doing? That's crazy. But yeah, let's jump in, man. Let's talk about this Oracle move, bro. Like I mean, Oracle went up like 40% after announcing a landmark agreement. They had an agreement, $300 billion projects target cloud computing contract with OpenAI. I feel like OpenAI is just grabbing all the companies and doing like contract with them. And that's supposed to start in 2027. Um, so I mean, like they just ran from there, this and this deal kind of like, I don't know. Is this the thing that kind of like made them run that crazy? Because everybody's wondering, was that enough for them to run this much?
So let me give you some context because I actually did some research on this,
Nice.
and this is what I want to say before we get started into this conversation. When you're looking at earnings reports, right? Everybody wants to pay attention to Did they beat? Did they miss? EPS,
Mm-hmm.
revenue. And let me tell you right now, do those numbers matter? Yes. But the number that matters the most is guidance.
Guidance.
Guidance is the key because remember, people buy stocks for future performance. I don't
Yep.
care what you did last quarter. I want to know what you're going to do in following quarters. And if you look at Oracle, Oracle past quarter missed on guidance, they missed on EPS and
Mhm.
they missed on revenue. But let's jump into their guidance. So non-GAAP GAAP EPS, so non-GAAP EPS 1.47 per share. Consensus is 1.48, so they missed by a penny. Not terrible.
Right.
Revenue, 14.9 billion, which was just under the $15 billion estimate, so another miss. So again, they missed on revenue and EPS. Now, let's look at their guidance and outlook. Cloud infrastructure or OCI revenue forecast raised to 77% year over year growth.
Sheesh.
77% growth. Long range cloud infrastructure outlook forecasted to expand to 144 billion over the next 4 years. Remaining performance obligations or RPO, an impressive raise of 359% to 455 billion. So it says multi-cloud momentum in Oracle with partnerships with Amazon, Google, Microsoft drove multi-cloud database revenue by 1,529% year over year.
God dang.
So again, what was the most important number in this report? It's future expectations.
Mhm.
Now, I will say this. If they don't hit those numbers, this stock is going to get smacked, right?
Yep.
Because remember, when you're guiding with big expectations, you have to start to fulfill those obligations. Because remember, Nvidia was there a couple years ago. They were giving crazy growth guidances on their GPU and their data center revenue, and they eventually were able to meet those expectations. That's why the stock kept chugging along and kept chugging along. Now those numbers are starting to get a little bit, you know, they're not growing as much, but they're starting to get a little bit stagnant. So Oracle is kind of doing what Nvidia is doing a couple years ago. And if they can hit on these metrics, I mean, that's just
There's no stopping them.
that's just crazy. And I keep going back to the whole AI picture, and it's like you don't really think of Oracle as a AI company per se, but the technology that they offer in sort of that multi-cloud space seem to be the 800-pound gorilla in that space,
Right.
just
Right.
like Nvidia is the 800-pound gorilla when it comes to GPUs and chips. So, man, what a move, man. I mean, Oracle is one of those traditional legacy tech companies like Cisco, IBM,
Intel.
Intel, right? They said this is their best day since 1992.
Whoa. I know somebody's happy. I mean, Larry, whatever his name is,
Oh,
he just
Larry
passed.
Ellison?
He
Yeah,
just passed. What's it called? Tesla's CEO Elon Musk for the richest man on earth. So it's like with this move today, So that's crazy, man. To make this
crazy.
comeback.
Yeah, that's crazy because I mean, you just look at the stock chart and Oracle's just kind of been chugging along,
Yeah.
nothing crazy, just kind of doing their own thing. But today, they made a big statement in the AI space. They said that, yeah, we got something for y'all.
Yeah.
So crazy. And I remember a couple months ago, last year, was it last year or earlier this year? Remember when Oracle was one of those big companies that was going into the nuclear, you
Mm-hmm.
know? Yeah, so
Mm-hmm.
crazy, 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 crazy. So we got another name to add to the list of companies powering the whole AI story.
Absolutely.
There's just new names that keep popping up, but I would not have expected Oracle to do. Now, another thing I'm probably thinking is that there were some people who were probably short.
Oh yeah. Oh yeah. They probably have to cover real quick too.
Oh man, being short Oracle, man, that
They
sucks.
had to cover real quick, and that's probably what drove the stock even higher because
Uh,
they
I mean,
needed to
it's
cover their position.
This was $118 stock back in April.
Yep.
Now it's a
Crazy.
300
200%.
$328 stock.
200% in like 8 months. I mean 4 months. 6 months. I don't know. 4 months.
Crazy,
That's nuts,
crazy,
man.
crazy.
But welcome to the stock market, man. Like that's what happens, you know. You find a good stock, or you do your research and all that stuff, and you will find something like this. Or sometimes you don't do your research. Some people do a YOLO and they wake up, you know, a million times richer. So
But let this be a lesson to folks when you're listening to these earnings reports. Pay attention to the guidance. Guidance
yep,
is the key driver for future stock performance. So don't get caught up in the EPS misses or the revenue misses because, every once in a while, right? Companies have bad quarters. You might have a bad quarter. Now you start stringing successive bad quarters, then you got a problem. But one bad quarter here and there, but you still give strong positive guidance, the market might show you a little bit of mercy. So
yep, yep. But yeah, keep an eye on Oracle. Let's see if you fill that gap back to the downside. I'm not sure, but we'll see. That's a big old gap to the
they
downside.
got they got big expectations now, though.
Yep,
Big
yep.
expectations now.
So
So
next earnings is going to be really, really important to see what
yes.
they say.
Mm-hmm.
And investors will make you pay if you don't meet your if you don't meet the expectation, they will make you pay. So
Oh,
that's
yes.
something to keep an eye on. Let's move on to Apple, man. Another disappointing event from Apple. I was very disappointed. I was waiting for them to announce something crazy. Some of the stuff they announced, iPhone Air. Who cares about iPhone Air? $999. And somebody was cracking up because it's like they seem like they just moved the cameras around and they give us another phone. You know what I mean? Um, they introduced the iPhone 17 series. What? Apple Watches? I
Now
mean,
the
they
what
add some stuff in there. They
I
added some
like
stuff in there.
I like the hypertension
Yep,
detector. That's good. That's
yep,
good.
yep.
Um,
The one that I like the most is probably the AirPods
yes.
Pro 3. I was like, listen, yeah, yeah, people who go to the salon and don't know what the hell these people saying when they're doing your nails. You better pop them bad boys on.
The interpreter, the interpretation. Now I don't know if that's how it works. I wonder if it see this is I don't know the details behind it, but I wonder if both parties need to have it on for it to
Mm,
work. That I don't know, but I
yeah,
think
yeah,
that's a good thing. Being able to
yep.
translate
Real time.
real time. That's really
Hmm.
good.
Yep,
So
yep, yep. But yeah, man, this event wasn't surrounded on like new technology or new. I would say newer technology. They might added some more features into the existing technology, but they didn't really introduce anything new to me.
no,
Like, there's nothing that mentions that we're doing this with AI. That doesn't mention anything like has to do with like innovation they're working toward.
no.
Like none of that stuff was mentioned. So I think this was more of, hey, let's show you what we're doing currently with our current existing line of products, but no new line was introduced.
Cosmetic
So
cosmetic updates. It's like going to the barber and just getting a lineup.
yep,
Nothing new, nothing changed. And I keep trying to tell people Apple is not a growth company no more. They are not a growth company anymore. Now,
yep.
someone did send me some information that somebody put up $23 million in Apple calls that expire in November. Let me read the actual trade. Let's see. So, expiration November 21st, 2025. Now, it's in the money, so it's not very speculative to me, in my opinion. But there was a $23.47 million trade into Apple. So somebody's bullish on Apple. Um, I mean, to me, if you real bullish on Apple, you go out of the money, even if it's
Right,
just at the,
right.
the 228 or the 230 strike. But $7 into the money, yeah, I'm not. That doesn't get me too excited. But
No,
it's
no.
a big trade nonetheless, though. It's a big trade.
Yeah, but at the same time, it's like, what? Like,
Yeah,
what are we doing, Apple?
yeah.
Please give us something to be excited about. You know what I mean? So I don't see
Nothing.
anything.
Nothing with Apple right now. And I'm not saying that they're a bad company. Don't get me wrong, but they're not a growth company. They're not
They're
the
not.
no. There are
They're
so
really not.
many other places out there that I would rather put my money if I'm looking for growth. And if we look at Apple, Apple is down 4 days straight this week from 241 all the way down to 226 now. So would not be surprised if it retests this 221 area near
Yep.
the, which SMA is that? Yeah, the 200 SMA. Would not be surprised if it touches that, because when I see the stock move and make these big moves, right, from on some of these announcements, there's not a lot of substance behind it, right? It's just like these one time like blips,
Yeah.
and
It
I
just
don't know, I don't know. I'm over them as a company. I- I'm over them as a company. So
somebody said in the chat, Lumen Technologies. Yeah, I saw Lumen move a good bit today. And that was due to like debt refinancing. So they're lowering interest burden and on some of their finances that they have taken. So I think people just kind of get excited about that, but they didn't really announce anything new. It's more about the restructuring their debts, basically.
gotcha. Yeah, I see they was up. I mean, there were a lot of big moves in the market today, to be honest with
Yep,
you.
yep. Did you see what is this stock, man? It was down like $200. Somebody like made like over 3,000% um put on them. I was like, dang, this is one of those stocks too that you don't really think about a lot. It is
Oh,
SNPS.
snaps. That's
Snaps.
not snaps. Synopsis. Synopsis.
Synopsis. It was down like 200 some dollars today.
Yeah, I think. Yeah, they were trading at 500, and then they dropped today. A nasty drop.
Crazy, crazy drop. So, yeah, that was one of those other crazy moves that's happening also. Um, yeah.
Now, one of the things I'll say to about today is there are some names that were down that I didn't expect to be down. Like Amazon was down
Mhm.
3%. A lot of the mega cap names, with the exception of Nvidia, were down today. And
Yep.
today was a day that was mainly driven by the AI story. And I'll
Yep.
be honest with you, the AI story is masking a lot of flaws in the overall economy.
Yep.
Let's just be real with that.
Yep.
Because from a fundamental standpoint, when we look at the economy in general, like you look at jobs growth and all that stuff, not a lot of good
We're
stuff
not doing good.
behind the curtains, right?
We're not doing good.
But the AI story is basically doing the Herculean effort of holding the market up without, letting it completely fall apart.
Yep. Yep.
And I will continue to hammer on the idea that there are so many moving pieces to this story. You just got to do your research and really hone in on, you know, where the next move is going to go. Because
Yep.
let's go to a stock that we gave y'all last year, one of my favorites, VRT.
VRT.
Let's go look
Yeah.
at VRT's move today.
Sheesh.
VRT was trading at, what did it close at yesterday? 125.
Hmm.
Today it hit a high of 141. So VRT, as these data center buildouts continue to happen, what does VRT do? Cooling technology is going to be needed.
Yep.
Now, I'm not sure if they're going to be the sole provider getting all of these contracts for these new data centers, but they play in that space. And let's not forget, we talked about VRT when it was like a $40 stock.
$40. It was still a baby.
It was still a baby. We talked about that last year when it was like a $40 stock.
Yep.
So as you continue to listen and kind of hone in on what's kind of going on in the market, I keep trying to tell people, I mean, let's just go back to April. It was a $53 stock in April.
Yep.
I mean, continue to just continue to be a student of the market and understand where is the world going? What
Yep.
is the new technology that's emerging? What's going to be needed in this whole AI infrastructure build out? And we've given y'all so many places to look. You got cooling technology, you got chips, you got power, you got servers, you got
Yep.
networking. We're going to talk about a company, you got REITs, like the actual physical data centers. So many places to look in this market, man. And I hope you guys have been paying attention, because we've been giving y'all free game for the
There's a
last
lot. There's a
year.
lot. There's a lot. And the thing also about the stock market is you can't sometimes you can't focus on all of them at the same time. So you pick. one or two that you kind of keep track of, so you know when
Correct.
to buy when the stock goes down, and you know when to sell when when you see a run. So it's like you want to be very very focused on what exactly you want to focus on. You know what I mean? So so you can keep an eye on it. For example, we haven't really talked a lot about Alclo. Alclo is kind of stuck at that one set. I mean, $70 around that area, right? It hasn't really
Mm-hmm.
gone down. It hasn't gone up. Like it's just been stuck in that area,
Mm-hmm.
right? That's another stock you got to keep an eye on because you just like, if you were into the nuclear story, you keep an eye on some of those stocks. If you were
Yeah.
into the data center story, you keep an eye on all that stuff. If you're into cooling, you keep an eye on that stuff. So just keeping an eye on those stocks to kind of help you like be ahead of the curve. So when it start going up and people start getting hype about it, you already in the trade, so you don't have to worry about kind of rush into it. So
And the thing is, again, as Billy said, you're not gonna catch everything. Like
mhm.
you're not gonna catch everything. If you want to catch everything, find an ETF. That
Yep.
might help. That might help you, but you're not gonna find all these individual names all at once. So as you sort of like do your research, maybe find one or two places that you want to be in the AI story and focus on that and just work from there. So now if you got a lot of capital that you want to invest in, that's a different story. But
Yep.
if you find good quality companies and concentrate your efforts on those, I think you'll be better off because I mean, just look at Oklo's move over the last year.
Yeah. Yeah.
you know Look at Oracle, right? Look at
Oracle.
And every time we see these like big headlines in the markets where we get these large pullbacks like we got in April, that's when you should be making your shopping list, or you should already have your shopping list prepared, and that's when you should be looking to execute on your shopping list, right?
Mhm.
So
Yeah, so keep an eye on those, man. We're definitely gonna keep giving you guys some more. Speaking of giving you guys some more, we have another what do we call this? Wednesday
stock market analysis
stuff.
Wednesdays.
Yeah.
I don't
So
know that. I don't think we've coined an actual phrase for this.
but we have another stock for you all, man. It's called APLD, man. Go look that ticker up. APLD is Applied Digital Corporation. So it is a company that I actually wasn't paying attention to it, but it designs and operates AI focused data center infrastructure. So while Wale's going to jump into that and kind of give us a deep dive into what they are and why it came on his radar and all that stuff. So I'll let you go ahead and do that.
All right, perfect. So let's jump into APLD real quick. Let me share my screen. All right. So APLD, how did this come on my radar? So one of the things that I was thinking about is um, as we think about this whole AI build out, right? We know that we need chips, we know that we need servers, we know that we need networking, we know that we need cooling technology. We know that we all of the stuff that kind of goes into the data center, right? And then I was like, what about the data center itself? Like people are going to be building these multi-megawatt data centers to deliver the output needed for AI. And there are other established data center companies out there, but I was looking for one that is kind of in the growth mode, right? And sometimes when you're looking at companies that are in growth mode, you run into companies that are not profitable. So I'm going to go over some details about this company, but at the same time, it's a cheap stock from a share price perspective, but very, very, it's not profitable yet, not profitable by any means. So let us jump into Applied Digital. So their business overview, they are a data center infrastructure and hosting company. Now, they were not always like this. This was not their core business. They're starting to pivot into data center hosting and infrastructure. They used to do other things. I don't know all the details of what they used to do, but they're starting to pivot their business into, um, you know, building the data centers and also making money off long-term leases. So their focus is on high performance computing, HPC, artificial intelligence, and also cryptocurrency mining. So remember, cryptocurrency mining requires a lot of power and a lot of chips and servers and all that stuff that goes into the mining process. So that's one of the things that they, host as well. Revenue model, so hosting fees. So again, they charge for power usage, and they also charge for the lease that people will be paying them to host these data centers. I think just recently they made a deal with CoreWeave, who was a recent company that just went public in the AI space. So that is their core business. So their customers are going to be AI companies, blockchain miners, cloud service providers, etc. So there's a lot of people that in that space. So will Apply Digital be the go-to company that continues to maybe get deals from these companies? I don't know. They're in the growth phase. They have the capacity to do it. That might be something that some of these companies start looking into. Revenue sources, hosting fees, power services, infrastructure solutions. Competition, Core Scientific, which I think was just bought by CoreWeave, Riot Platforms, Marathon Digital, and then they also have competition from digital data centers like Equinix and Digital Realty. Equinix and Digital Realty are some of the bigger players in the REIT data center space. They've been around for a long time. They're a little bit more established. So APLD is in the growth phase. They're starting to enter this space. So we'll see if they start becoming the provider or a new name in that space, and they start to really make headwinds. Now, revenue. This says last 5 years, but this is not the last 5 years. It's actually the last four, because 2021 data wasn't a lot of data on 2021, but $8.5 million in revenue in 2022, and then look at that jump in 2023, 5.39 million. Then look at that jump in 2024, 136.62 million, and then 2025, 144.19 million. So CAGR, which is compounding annual growth rate, 156%. So what does that tell you? That tells you that they are in a hyper growth phase as a company when it comes to revenue or top line numbers, right? But we got to look at the full story. So let's dive into this a little bit deeper. Profit margins, deeply negative, deeply negative. So 2022, negative 275%. 2024, negative 109%. Negative, and in 2023, negative 80%, and 2025, negative 62%. So they are burning through a lot of money right now because, again, they're trying to scale. They are in the growth phase. And sometimes when you see companies in this phase, you see negative numbers. So you just have to realize that. Free cash flow. So again, very, very high cash burn, because remember, these are infrastructure, right? They're building data centers. So this is a very capital intensive business. Just like if you buy real estate, right? You're buying land, you're putting up buildings. So free cash flow has been very negative, negative 55 million, negative 72 million, negative 128 million, and in 2025, almost negative $1 billion in free cash flow. So companies that are in this hyper growth phase that are not profitable, free cash flow is probably not the best metric to look at because of that. So I'll give you another metric you can look at for companies that are in this phase when you want to look at evaluating those companies. So they don't have earnings, so you can't use PE because there is no profit at the end of each year. So you want to look at price to sales. So price to sales right now is 6 times, which is not super expensive. So again, no PE due to negative earnings. Another metric that companies use that are growing is EBITDA, earnings before taxes, interest, and amortization. So when we look at this company and we look at EBITDA, the numbers that I was able to pull up, 2023 was negative at 35 million. But in 2024, they made a turnaround at 64 million. And in 2025, that did come down to 57.62 million. So that would be a number I'd be keeping an eye on, at least until they become a profitable company. So companies sometimes do start very, very unprofitable. It happens from time to time. But eventually, if they're able to figure it out and scale, then they can start turning profits and being consistent. So again, this is a company that is not profitable by any means. Now, when I look at their balance sheet, I'm like, okay, if they're unprofitable, let's look at total assets and liability. So assets about $1.87 billion, liabilities 1.236 billion. So not a lot of equity in this company, just above 633 million. So their leverage is manageable to a certain degree because again, assets do exceed liabilities. But one of the things that I did see on their balance sheet is they don't have a lot of cash. I want to say they only have maybe about $44 million in cash. So short-term liquid assets, not very, very high for this business. And a lot of that probably has to do with the fact that they're expanding and they're taking on a lot of debt to fund these expansions. So something to be mindful of if you're going to invest in a company that's in this phase of their business. Operating margins. Now, again, one of the things I will look at is if you look at improvement, there has been drastic improvement. So going from negative 229% in 2022 to negative 27% in 1990, to negative 27.96 in 2025 shows that their operations are improving. Now, again, still negative, still a lot of work to do, but major improvements from 2022 to 2025. So that trend is good. Now, not a lot of coverage on this stock. Most people say an average price of $15. Right now, it's trading at 16. I will say that this in the last week, the stock is up 17%. So it's made a pretty tremendous move this week already. So this is one that I have my eyes on. Probably not ready to pull the trigger just yet. If I miss it, I miss it. But something to just keep in mind on my list. Now, again, remember, capital intensive business, and they need to get people to fill those data centers that they're going to be leasing out the space in. So overview, APLD is a capital intensive pivot play. So they're moving into data centers for AI and crypto, pivoting towards a REIT model, so a REIT, real estate investment trust model. Growth is real, but also are losses. So let's not just look at the revenue increases. Understand that there's lots of negative numbers when you look at cash flow, look at operating margin, and you look at profit margins. Now, high risk, high return scenario. So if AI demand and execution align, upside can be very, very meaningful, but debt and execution risk are very real. So an example I'll give you is Oklo. Oklo is a company that is very negative. They're not profitable, and they don't even have any revenue yet because they have not built their product. But they're scaling and getting to a point where they're getting commitments to when their product is ready, they can deploy it. And their product is not going to be ready until 2027. So Oklo paid off. Could this also potentially pay off? Possibly. But remember, it's a very different business than Oklo. Oklo is more technology and power. This is more real estate and infrastructure. So we'll just have to wait and see. But I want to give you guys this name, put it on your list. I would put this on the speculative list as far as companies. Because if you want to just go into the data play, into the real estate REIT data play, you got names like Digital Realty and Equinox who are established, right? And you can look at those companies. But I put them on my list because I'm seeing that hyper growth potential. So that's why I kind of wanted to, give you guys this one out there. So
It's crazy, man. Some of this company actually remind me a lot like kind of like the same thing what Uber was doing. Uber was burning to a lot of cash before they became
oh
a little
yeah,
bit profitable.
yeah.
You think about Amazon, you think about even Tesla, right? You think about those big companies who like burning through cash before they even became like this big what they are right now.
Yeah,
So this is kind of is when you were talking about it, how fast they're burning through that cash. I was like, man, they're reinvesting all of that back into the
into the
business.
business. Yes, yes.
So
That's exactly what's happening. All of their profits are
yep,
getting reinvested back into the business.
yep,
And
yep,
because building, land, permits, all that stuff, very capital intensive. Very
yep,
just like if you want to be a real estate investor, right? You need capital. Like you want
yep.
to get in a commercial real estate, residential real estate, apartment buildings, right? You asking 20% down payment in most cases
Mm,
on a property that could be, $1 million,
yep, yep.
$500,000. That's not little
It's not a
money.
small money.
That's
Yeah,
not small money. So
yeah. And I
yeah.
was surprised that Wall Street actually owns. I mean, when it comes to institutional ownership, they own about 54.9% of that stock.
Oh wow.
Insiders own about 11.2%.
Okay.
And retail, this is surprising. Retail owned about 33.9%. I was like, damn.
Uh-oh. And I think the reason why is because it's one of those stocks that if you look at it, where was it trading a couple? Yeah, it was a $3 stock in April.
Yep. So a bunch of retail jump into that.
Yeah, it was a $3 stock back in April.
Yep.
And after they had an earnings report in April, that's when it kind of took off. It pulled back. They had another earnings report, it dipped, and then it took off again. Now
Yep.
it was up 11% today. And it
I won't
made
be
a
surprised if there's shorts in there too.
oh yeah, there's definitely shorts in there.
Yeah.
Yeah. So the last 3 days, this stock has really moved, and I think it's getting close to its high of 1760. So yeah,
And
I'll
their biggest shareholders from institutional at least is Hood River Capital Management,
um
BlackRock. BlackRock owns about 6.6%.
okay.
Vanguard owns about 6.5%.
I take that back. Their high, their all-time high is
That's
34,
120,
no, 3420,
3420.
I think.
How far back are you going?
I'm going 20 years.
Okay.
Yeah. So 3420. I don't know if they did any splits or anything like that.
Probably did. Yes. Yeah, they probably did.
Yeah, 3420 is their most recent high, and that was back in 2021.
Yeah, if you go back to 2023, they went to like 112.
Oh wow.
Yeah,
Yeah, maybe
2003. Yeah, they were up there. But yeah, ever since then, I mean, they kind of
2000,
just
2003.
yeah, they were at 112.
I don't think this stock was around in 2003. APLD.
Yeah, Applied Digital Corporation, right? Yeah. I see yeah, I see here January 2003. They IPO January 2002.
Oh, okay. Huh. Yeah, Thinkorswim's only going showing me back to 2010.
Okay.
Yeah, well,
But yeah, I mean, and I was looking at some of their customers too. Um, some of their known customers, believe it or not, is one of them is Core Weave.
yep. I think they just signed a long-term lease with
Yep,
CoreWeave.
like a
Yeah.
15-year lease, and they have
Hmm.
character that AI is a AI cloud service client, and NVIDIA, their strategic technology partner, and they're also an investor in the company.
Yeah, I think Nvidia owns shares.
Hmm. So somebody believe in them. The NVIDIA owns about 3.5% shares, which is equates to about 7.72 million shares. So that's a lot of shares. So
Keep that on your list.
we'll talk about this in a few months and see what they are.
Exactly. Exactly. So
Yeah. But other than that, man, let's talk about tomorrow. CPI is coming out tomorrow. What are your prediction on that? Because I was looking at it earlier, and it looks like people are expecting a little softer CPI. So I don't know. We'll see how it looks tomorrow.
to be honest, I mean, as long I think I don't know if CPI is gonna matter that much. I take that back because PPI came out good, market popped and then sold off.
Yep.
So could we get the same thing with
Probably the same thing.
CPI? It's possible. Let
Yep.
me look at something real quick because I was on the road and I was just like, let me see something real quick. Yeah, so if you look at QQQ, QQQ is having a lot of trouble near this 580-ish area.
Mhm.
You got like a double top that's formed because it hit that high um on August 13th. It hit that high today and it sold off both times. So until we get past this 583-ish area, we'll just have to wait and see what happens. But yeah, I mean, I don't know, maybe the rate cuts are priced in already. I mean, I would assume so. I mean, I kind of think everybody
Everybody kind
kind
of
of
know,
knows now.
yeah.
The question is it 25 or 50?
Hmm.
That's the real question. So yeah, we'll see what happens. But yeah, when CPI popped, I mean when PPI saw the market pop, I thought we would see more stocks higher, but it was really just a
Nope.
concentration of just various stocks.
Yep.
Like,
And then
you know,
we saw that sold off after that. It's just like it didn't last that long.
yeah.
So
So remember that, with the AI story powering the market, remember it's not a broad rally. Like this is not a
It's very
tide that's
concentrated.
lifting all boats. This is very concentrated because if we
Yep.
look at the RSP hasn't really done nothing. It's been consolidating.
Yep.
It hit a
Yep.
high of 189 and it's kind of just been fluttering between 189 and 185, just kind of bouncing around. So
Hmm.
not getting a lot of broad market participation. Not necessarily a bad thing, but you just have to know that a lot of the what is powering the market is momentum. It's
Yep.
momentum. Yeah,
Yep.
it's not fundamentals.
We also get a weekly jobless claims tomorrow, so
Yep.
that's back to back. I mean, like 8:30 CPI comes and jobless claim come at the same time. So I don't know which one of those is gonna move the market. Maybe neither will move the market, but
Yeah.
we just never know, you know.
We'll just have to wait and see.
And I think the federal budget is also coming out at the same time at that 8:30 also. So
Yeah.
we shall see.
The big meeting is next week Thursday, next week Wednesday, Fed meeting on the 17th. That's
Yep.
the big
Yep.
day. And
I think
again,
everybody will be watching that day.
yeah, everybody be watching that day. Yep. So the question at this point is it 25 or is it 50? I'm going with 50.
I
I'm
mean,
going
I
with
think
50.
they were toting even like a hundred point basis, I think.
Ooh, if they do 100,
I
if they do 100,
don't think they're gonna do 100, but there were somebody. I think it was who's that guy? The guy that always talks about the CP. I mean the rates, but he was like maybe even 100 point basis even is in play now. So I was like, I don't know, man. We'll see.
you know what's crazy? Mr. Trump been buying bonds.
Yeah, most people don't understand that he.
So people be like, why is Trump buying bonds? Well, let me tell you, when rates go down, bond prices go up. So Mr. Trump is it now we know why he wants those rate cuts.
Yep, yep. And the other thing, people want money, borrowing money to be cheaper.
Cheaper. People want borrowing money to
So
be cheap. This is the credit economy. The cheaper
yep.
money is to borrow, the,
And we're probably going to see a
the easier
lot of
things.
people borrow money if the rate goes down. We're going to see, especially if you're wealthy and you have connection,
Yeah. Now
you're about
your
to.
savings rates are going to go down. Your CD
Yep.
rates are going to go down. I mean, but
Yeah.
that's
Yeah.
that's all relative. But yeah, Mr. Trump been buying bonds, so he's expecting something.
Yep. 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 But yeah, man. Any last minute comments or any advice going to like the end of this week to see exactly how we are going to end up?
Nah, I think we keep flirting with all time highs, and we haven't really broken any like really new highs. Probably won't see anything until maybe next week. So we'll see what happens. But I will tell. This is what I'll spend at least a couple hours a week to do research on the whole AI
Yep.
infrastructure build out. Because that way you will find names that you may not have thought of before.
Mhm.
I mean, that's how I found, Applied Digital, just kind of going down the rabbit hole and trying to figure out what parts of because all the technology names, they're the ones that get all the hype, right? So, the thing is you want to get in before the hype starts to get out there. Like,
Yep.
Oklo is a good example of that. So,
Hmm.
I'm hoping maybe if Applied can figure it out. Again, this is speculative. I'll keep
Speculative.
saying
Yep.
it. It's speculative.
Yep.
Don't
Yep.
go out there and put all your all your capital in there. But yeah, it's just a name to watch. Do your research. Listen to the earnings reports. Sometimes you can even go on the investor relations page and find information on there because every
Absolutely.
earnings report they post all the information on their investor relations page. So publicly traded company, they have to do it. So
Yep.
there's a lot of information out there. Use Chat GPT, use Copilot. You got to be a good prompter to get the information that you actually want. But as we've kind of done these deep dives into these companies, use those same metrics to kind of look at
Mhm.
companies. So yeah, but I've got nothing for the rest of the day.
Yes, sir. But I'm glad you said that whole give it a good prompt, man. I'm telling y'all, learn how to work with AI. Like learn how AI is gonna force you to ask the right questions. It's gonna force you. If you wanna get a very specific answer, you gotta ask the right question. Sometimes you have to ask it multiple ways.
Hmm.
But
Yeah.
I'm
And it,
telling you.
and the thing I like about AI is that it's objective.
Yep.
There's no bias because there's some questions that some controversial questions. I mean, I've spent hours on ChatGPT having discussions about topics that people push me on, but I'm like, okay, you think I'm biased? Let's go to an objective source and have that same discussion, and let's see what the answers are.
Yep.
And 99% of the time, I'm right.
That's
So
crazy, man.
it'll give you objective information. So
Yep.
now sometimes you might need to fact check it because they do have that disclaimer that sometimes
Yep.
AI, especially when it
Yep.
comes to like mathematics, right? So make sure that you sometimes fact check those things. And I
Yep.
like the fact that now it can cite the source. You can always double check the source to see if it's accurate.
Absolutely.
That's a great thing to
Absolutely.
always do. Yeah.
Absolutely. But as always, y'all, thanks for tuning in. If you guys enjoyed today's breakdown, man, please don't forget to follow, share, and leave us a rating and a review also.
Yeah.
It honestly helps more people join in the conversation if you just leave a comment or, leave your thoughts on there.
Yeah.
But other
Yeah.
than
Our
that,
our goal
uh,
every week is to give people quality
quality.
information that
Yep.
they can actually use. You know, I'm not here to entertain you.
Right,
I'm
right,
here to
right.
give you quality information that you can actually use. And I will say, I'm pretty proud of the things that we've kind of given y'all from an investment
Yes.
standpoint over the last year, because if you actually used it,
Yeah. You
I
definitely
mean,
find some good gems
you
in there.
found some good gems, man.
Yep.
So, I mean, I'm
Yep.
just
Yep.
looking at, I'm still up 28% on Intel shares. Oklo still doing what it's
Alco's still up
doing.
there. Yep.
VRT still doing what it's doing. So,
Mm-hmm.
if you don't like doing the work, listen to the Wall Street rundown. We'll do the
Yep.
work for you.
Yep, yep. And I know we don't talk about this a lot, but I know we talked about if you manage your own 401k portfolio, we talked to you guys. We did a whole episode on this back, I don't know, a few months ago. It's like maybe it's time to start looking into putting more into your portfolio. So if you did that, I promise you, your portfolio is up. I'm just telling you, if you
Or
did
if
what
you
we
or
actually
if
do,
yeah, if you dollar cost average when
dollar
we had
cost
that,
average.
because when we saw that drop happening,
Yes.
this was like in March,
Mm-hmm.
and we were kind of telling folks, we don't know if we've seen the bottom yet, but be prepared to deploy your cash gradually as the market drops. And if you dollar cost average,
Yep.
I mean, some of those names, I mean, it might be a while before we see those stock prices again. It
Yeah.
might be a while. So,
Yeah. Yeah.
but we'll see what happens next week. Right now, we'll probably talk about this on Friday. But your boy Jamie Dimon,
Oh, he's starting to talk again. He's starting to talk again. I'm telling you.
get your boy.
He's starting to talk again. And you know what? Usually when that happens is yes, we might see a dip, but I'm telling you, my man is already in position to buy.
Oh yeah, they deploying.
So
He
yeah.
talking about, I don't know if we're going to see a recession. Now, I will say this: is the economy slowing down? Yes,
Yes.
but obviously we have cycles. We get slowdowns from time to time. So,
Yep.
now this slowdown is not as bad because, to be honest, right, the earnings from some of these companies, they've been really good.
Mm-hmm.
I mean, earnings have been really good. So, which is another reason why I keep, we've said this millions of times. When you're looking to invest, a lot of these B2B companies are a lot better than these
Yep.
B2C companies.
Yep.
Because if we look at where things are slowing down, they're slowing down from a consumer standpoint.
Consumer. Yep.
Consumer standpoint. Now, businesses are not, maybe not be hiring as much, but one of the things that they're probably trying to do is they're trying to get more efficient. Less people, more production. And that's
Layoffs.
and
Yep.
that's where AI is trying to bridge the gap.
Yep.
So
Yep.
yeah, man. Stay in tune, keep your eye to the streets.
Yeah, yep. There you go.
Yeah. So
But we'll be back on Friday for more market movers and deeper dive into some stocks and tell you guys what's moving the market and how is it affecting your portfolio. With
yeah.
that being said, yeah, have a good night. We'll see you guys on Friday.
See you Friday. Take care,
All
everyone.
right. Peace.